Hello everybody and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today we are going to be revisiting PayPal stock. This one came in by request down in the comments section of one of my other videos. If you have a request you'd like me to take a look at, just put it down in the comments. I'll get the ticker on the whiteboard behind me. I'll let you know that I got it up there in the comments and eventually I'll make a video. If it's a stock that's in the S&P 500 like PayPal is, I post those on YouTube for free. The rest I post over on Patreon. At the $5 per month tier level if it's a stock that's not in the S&P 500. I also have a $25 a month tier level on Patreon where I share one stock pick per week. Oftentimes my buy prices are quite low on the channel. People tell me that they will never hit, so I created that partially for those folks. So I will always find something in the market, and even if it's not at my particular buy price, I'll find the best thing that I can and share it. I launched that in October. So far it's doing really great, significantly outperforming the S&P 500. So that's been great, and it's been kind of fun to go each week and just kind of make myself find the best deal in the market. So check that out too. Those links will be down in the description. I also have a 25% off affiliate link for Fast Graphs, which I'll be using here. That's down in the description as well. Okay, PayPal. So someone asked me to go and review this one again because it was a buy here last year about this time. Technically, it was 11 months ago because I checked. I think it was December 15th is when the buy video for PayPal came out. But before that, back in 2021, early 2021, I put out a bunch of videos at the beginning of that year, and I had some buys, some sells, some avoids in each video. And PayPal was one of the sells based on valuation. So that came out on February 6, 2021. So I'm kind of proud of PayPal because it makes me look pretty smart. Not all stocks managed to do that. So February, like just a couple days later from here, is where I suggested it should be sold based on valuation because the valuation was pretty crazy high based on the earnings growth. And then we bought it last year, December 15th. So we'll go down to there. So this is what it did in between the sell video and the buy video. Stock fell 77%. Then we bought it down here, and now it's up about 41%. So that's about as perfect as I can do. Hopefully the stock price continues to rise. Maybe we can get it at least up to these 2020 levels. So that's quite a bit more still to go, another 50% or something. But I'm going to revisit the valuation today to see if it's a hold, a buy, kind of what's going on with the stock. So let's go to, let me make sure my spreadsheet's going to load first. One of the things I did, okay, I just wanted to make sure that was fresh, is when I did PayPal's valuation, instead of using the adjusted earnings, in order to be more conservative, I used the basic earnings. So that was one thing that I did. So I'm going to keep doing that in this video. So what we want to look at here are the basic earnings, what they're expected to be for this year. And they're looking to be like $3.94. Now the earnings growth, then we want to know what rate will they potentially grow after that. I chose 12% last year when I did this, right around here. And it looks like they're only going to grow about 2% or so this year, but next year is supposed to be 20 and then 12. If you average these three together, you get about a 12% earnings growth rate. So I think we're still potentially on track if analysts are kind of close to being right here. So I'm going to stick with that 12% earnings growth assumption, but I'm going to use this $3.94. So you can see that's lower than the adjusted earnings of $4.57. What's interesting is this number actually came down and is lower than what they were expected to be. So this number is compressed, but the basic earnings expectation has stayed almost exactly the same. So I think it was a smart move to go ahead and use those basic earnings on this one. because they've been very steady. They haven't really the expectations haven't really changed much this year, whereas the adjusted earnings have fallen and gotten more negative. So now let's go to the spreadsheet here and we'll look at the math on everything. Here we are, and I'll move my head down. So I'll try to move my head down. There we go. So you can see some of the labeling. All right. I also recommended this one on Seeking Alpha in an article as well. I think it came out almost the exact same time as the YouTube video. So was able to get that message out pretty loud and clear last year that I thought this one was a pretty good buy. Maybe one of the better buys, like value propositions in the S&P 500. I know there's other stocks that have kind of rocketed higher, but those are more kind of speculative, I think. And this is more of a value, kind of normal value play, right? Just earnings-based analysis, basically. So I have the 12% earnings growth assumption. What we want, so this is their normal earnings or adjusted earnings growth that's expected. I'm actually using this number today. So when we use that number for earnings, we get an earnings yield of 4.52%. So the earnings yield is the earnings over price instead of the PE, which is the price over earnings. That gives you a decimal here, and then I just change that to a percent. So the way to think about that is, if I bought PayPal's whole business for $100, I would earn, if I own business, I would earn $4.52 in earnings on that $100, which is what my spreadsheet's set up to calculate here. So, and then each year, this $4.52 is going to grow 12%. That's what I assume. Now, I assume that you invest $100, the 100, and then I pull this first year forward, so it's going to be 507 for the first year, because it's 12% growth on the 452. The $105 is not growing at 12%, just this 507 each year. And then I assume that money is going to be collected by the owner of the business. So I want to see how much collectible, basically, earnings there are after 10 years using this method. So I go out to 10 years. My $100 investment would have earned $88.90 more. And if I plug that into a CAGR calculator, it gives me, this is over 10 years, so a 6.57% earnings CAGR over 10 years. That is right at my estimate of fair value. Usually 6.5% 10-year CAGR is like midpoint of fair value. It's basically fairly valued if they can grow these basic earnings at 12% a year for the next few years. Well, really, I extrapolate that out for 10 years, but if they stay on that target, then they're fairly valued at today's price, even though the stock has risen 40%. So that's the benefit of buying a stock when it's at a discount, is the stock price can rise quite a bit and you're still not like overvalued. This is still actually, if they're able to grow, cheaper than the average stock in the S&P 500. So it's a hold. So you just kind of hold it and wait and see if they can grow those earnings. Very simple. Now, if you were going to buy the stock again, it needs to fall about 25% down to $63.60 is what I have right now. So that's the recession buy price. The normal buy price is still is $56.70. So right around that $60 area, give or take, would be, where a person could consider adding it if they didn't already own it. I'm not going to get into the details of all of the recession stuff this time because I've done it in previous videos and it would just make the video longer. So this is a pretty good checkup, I think. Things are going relatively well, but they're going to have to eventually here start growing earnings. So it looks like the stock is kind of putting in a base. And then 2023, the basic earnings jumped 84%. So we'll see what happens this year if they close out okay. And analysts are expecting 20% growth next year. Whether they kind of get close to that will probably determine what happens to the stock price from here. If they're slower than that, you can probably expect this stock price to fall. If they hit it, I think maybe it just kind of grows like normal. So, I mean, there's other factors that move stocks too, other than just the fundamentals. But we're starting to see a little bit of evidence that, I mean, if they like 394 in terms of their basic earnings will be a new all-time high. So they're growing. They're like on the right track. It's just a matter of whether they can keep it going or not. They're a big company, but I mean, 86 billion isn't huge. The stock is still, let's see how far down it is. It's still 72% off its high from the bubble back here that I was warning everybody about. So there's still definitely a lot of room that they could potentially grow. Even before COVID, the price peaked out about 122. That's another 50% higher from here. So even if we just get back to kind of what the market was, and earnings are actually going to be higher, significantly higher this year than they were in 2019. So it'll be interesting to see what happens with this one, but I think we avoided it at the right time, bought it when the odds were kind of more in our favor. So even if it doesn't work out, I think it was a worthy try. Okay, so if you found this useful, hit the subscribe button, like button. If you have a request, put it down in the comment section. Make sure to check out the Patreon pages. If you do join one of the paid Patreon tiers, you get a big discount if you ever decide to join the full Cyclical Investors Club service on Seeking Alpha. That's where I have all the spreadsheets and chat room and all that kind of stuff. Well, I have a chat room on Patreon too. You can talk to me there, but you kind of really get full access to everything I'm doing. I monitor like 700 stocks and keep those updated and answer everybody's questions. And it's really, and we have a lot of great members over there that kind of help me find ideas and give me context for things that I don't know about. So consider checking that out, and I'll see everybody later.